Today's financial landscape is teetering on the edge. From dramatic shifts in stock trends and alarming job market signals to a volatile housing inventory crisis, experts reveal shocking insights and bold predictions. Discover which stocks could be the next big winners or losers, why the job market may be in deeper trouble than thought, and how the housing market's future could impact you. Stick around for in-depth analysis, and don't forget to like and subscribe to support our channel. Today, on Financial Analysis in Review, we will summarize the following videos. From Crowded Market Report by Jason Shapiro, we have CMR Interviews, Mike Webster, Trading Mindset, Discipline, and Having Fun. From NorthmanTrader, we have NorthCast Market Update at the Edge. From EPB Research, we have U.S. Housing Inventory Crisis, Its Impact on Home Prices. From Eurodollar University, we have the job market just broke. Welcome to Crowded Market Report by Jason Shapiro. Today, Jason dives into an engaging conversation with the one and only Mike Webster. Mike is the head market strategist at Investors Business Daily, a name synonymous with the legendary investor William O'Neill and his renowned CAN-SLIM trading method. The core thesis revolves around the CAN-SLIM stock picking method, which Mike Webster ardently believes is the best system for buying momentum and growth stocks. CAN-SLIM stands for elements like current earnings, annual earnings, and new products, focusing on stocks that display strong earnings growth and technical momentum, provided the general market condition supports it. Here are the key points discussed by Mike Webster, head market strategist at Investors Business Daily. Introduction to CAN-SLIM method, developed by William O'Neill, a legend in stock picking who favored a momentum trading system. CAN-SLIM is an acronym representing 7 key factors: current earnings, annual earnings, new products, supply and demand, leader or laggard, institutional sponsorship, and market direction. The method combines focusing on companies with strong earnings growth and technical momentum. Fundamental and technical analysis. Blend CAN-SLIM doesn't fight the tape, preferring stocks that follow market momentum. O'Neill's theory was that price-earnings ratios don't matter as much and emphasized looking at the data to determine growth. Importance of volume and price in the general market for decision-making. Historical market analysis. Mike and his team meticulously gathered and studied market data from as far back as the 1880s to understand what worked historically. Historical cases like the 1929 crash and comparisons with 2000-2002 emphasize the repetitiveness of market psychology, fear, and greed. Mindset and disciplined success hinges on being disciplined about your system, whether it's CAN-SLIM or even flipping a coin. Post-analysis of trades to understand mistakes and refine the system helps maintain discipline. Bill O'Neill preached honesty, avoiding ego-driven decisions, and a steadfast routine, even during harsh trading periods. Mike Webster, head market strategist at Investors Business Daily, made the following predictions. Market rotations. Mike predicts a current market shift from chip stocks like NVIDIA to software stocks, expecting software names like CrowdStrike and ETF IGV to take the lead in the upcoming trend. Mike wraps up by emphasizing the necessity of discipline, understanding market phases, and sticking to the rules of your chosen system. He encourages traders to not just copy others, but to adapt systems that align with their own risk profiles and personalities. Finally, Mike reminds traders to keep it fun and maintain discipline, the ultimate key to long-term success. Welcome back, everyone. On today's NorthCast Market Update, Sven Henrich dives deep into the current market conundrums and the pivotal events awaiting us in July 2024. Buckle up as Sven, known for his incisive analysis and no-nonsense approach, walks us through the bizarre divergences and what they might mean for investors. In today's episode, Sven Henrich posits that we are at a critical juncture in the financial markets, with trend lines and economic indicators suggesting we could see significant moves either up or down. This precarious balance is due to divergences between major indices and their equal weight counterparts, plus the looming impact of earnings reports, inflation data, and Fed meetings. Here are the key points discussed by Sven Henrich. Great bifurcation. Despite strong moves in the S&P 500, broader market indices remain weak, showing a vast disconnect. The question remains if the market will broaden out or if this is a trap. Fed meeting and earnings. July is pivotal because of upcoming earnings reports and another Fed meeting at the end of the month. Buybacks are out but will come back in August, adding to the juggling act. Technical indicators: S&P appears technically overbought, suggesting caution. RSI and other indicators point towards potential corrections even as indices push higher. Market divergence. The S&P 500's concentration contrasts sharply with the weakness in equal-weight indices. AI hype is driving tech stocks, but the real revenue and productivity gains are yet to be seen. Sven Henrich made the following predictions: upcoming market decision. July will likely see a significant market move, either breaking up or down, influenced by earnings reports, inflation data, and Fed decisions. Charts are poised for a decisive move. Equal-weight indices suggest either a broadening out or potential breakdown. Tech stock performance. If large-cap tech corrects, it could lead to a dramatic market downturn. Conversely, if the market broadens out, we could see rallies in weaker indices. Sven Henrich concludes by emphasizing the high stakes in the coming weeks, with markets at a critical juncture. He advises close attention to upcoming earnings reports and Fed meetings, as they will significantly impact market directions. For those wanting a more strategic approach, he invites you to join him via NorthmanTrader's market services as we navigate these turbulent waters together. Welcome to EPB Research. Today, we're diving into the intriguing and often confusing world of the U.S. housing market, focusing on the ongoing inventory crisis and its impact on home prices. As always, our host is the insightful Eric Basmajian, who will guide us through the labyrinth of housing data with his impeccable expertise and a dash of humor. The video centers on unraveling the real inventory situation in the U.S. housing market by distinguishing between the existing home market and the new home market. Eric argues that by comprehensively analyzing both supply and demand, one can gain an accurate understanding of current housing market pressures, offering a clear projection of its future trajectory. Here are the key points discussed by Eric Basmajian. Sales volume drops. Existing homes have a sales pace of approximately 3.7 million per year, while new homes sell at 619,000 per year. Both markets have witnessed a dramatic drop in sales volumes due to rising interest rates affecting affordability. Inventory levels. The existing home market has 1.1 million homes for sale, one of the lowest levels on record. The new home market boasts 479,000 units, one of the highest since the 2007 housing bubble. Month supply. The month supply figure for existing homes is 3.7, indicating a tight market but rising from a record low of 1.6 in 2022. For new homes, the month supply is 9.3, suggesting a surplus and downward price pressure. Regional variations. The national average month supply stands at 4.5, with regional variations causing some areas to experience upwards price pressures, while others face declines. New home market complications. Only 20% of the new home units for sale are completed, while 80% are either under construction or not yet started. The share of completed inventory is returning to normal, from a low of 10% to 20%, but could rise, leading to further price cuts. Building permits decline. Building permits have dropped significantly since 2022, as homebuilders struggle with sustained high interest rates and dwindling buyer demand. Eric Basmajian made the following predictions. Continued tightness with regional variances. National housing inventory will remain tight overall, but certain regions may see sharper declines in prices due to higher than average month supply figures. Increased price reductions and layoffs. As the percentage of completed new home inventory increases, significant price reductions and potential job layoffs in construction are on the horizon unless buyer demand significantly picks up. Further decline in new construction permits. New building permits are likely to decline even further as inventory levels of completed homes increase, signaling a slowdown in new construction activity. Eric Basmajian wraps up by driving home the point. Although U.S. housing inventory remains tight, it's a dynamic situation with rapid changes on the horizon. The action steps are becoming clearer. Keep an eye on regional market variations, anticipate potential price reductions in the new home sector, and brace for a slowdown in new construction unless there's a significant uptick in buyer interest. Real estate aficionados and casual viewers alike are encouraged to stay tuned and keep those notification bells rung for the latest updates. Welcome back to the Eurodollar University. Today's video takes us deep into the heart of the labor market with our insightful host, Jeff Snyder. The topic of discussion? Buckle up. It's all about how the U.S. job market is not quite the fortress of strength it's been touted to be, especially after the unsettling June 2024 payroll report. The core thesis of today's video is that the U.S. job market is showing serious cracks, suggesting we might already be in the grips of a recession. The June 2024 payroll report casts significant doubt on the strength and resilience of the U.S. labor market, debunking the perception propagated by official surveys and policymakers. Here are the key points discussed by Jeff Snyder. Unreliable Establishment Survey. The June 2024 payroll report continues to show significant downward revisions, indicating that prior job gains were overestimated. Key evidence included a 277,000 job estimate correction and a larger prior month correction of 111,000 jobs. Rising unemployment rate. The unemployment rate reached 4.1%, having risen 0.4% this year alone and 0.8% since last year's low. This is a strong recession signal. Businesses are cutting hours and converting full-time jobs into part-time positions. Discrepancy between surveys. There's a notable divide between the establishment survey and the household survey, which is becoming less prominent, suggesting converging pessimistic outlooks. The stock market, despite this negative data, continues rising, potentially misleading investors and policymakers. Temporary and full-time jobs decline. Temporary jobs plummeted by 50,000, indicating businesses are starting to cut costs aggressively. Full-time jobs have decreased by 1.5 million since November, as seen in the household survey. Impact on consumer confidence. Rising continued unemployment claims suggest that once workers lose their jobs, reemployment is difficult. Consumer spending is declining due to job insecurity and rising energy prices, creating a vicious cycle of reduced economic activity. Jeff Snyder made the following predictions. Further downward revisions expected. Jeff predicts more downward revisions for future payroll reports, especially with the upcoming benchmarks revisions and QCEW data. This will likely be a significant shock to the market, which has been misleadingly optimistic. Escalating recession signals. Steve Meters forecasts that upcoming corporate earnings seasons will reveal reduced demand, validating the pessimistic outlook on the labor market. Expectations are that the unemployment rate will continue to climb beyond the current 4.1%, exacerbating recession fears. Jeff and Steve conclude by emphasizing that the evidence of a weakening job market is overwhelming and can't be ignored. The message is clear. The U.S. economy is not as resilient as the headlines suggest. They urge viewers to brace for further economic downturns and to critically view official labor market statistics. Keep an eye on real-world indicators and maybe start chatting up your local baristas. Across several financial sectors, our experts have laid down compelling arguments. Mike Webster champions the can-slim method for trading, focusing on growth and momentum stocks. Sven Henrik emphasizes the precarious state of market divergences and the potential pivotal moves this July. Eric Basmajian dissects the U.S. housing inventory crisis and its impacts on home prices. Finally, Jeff Snyder warns of the cracks forming in the job market, signaling an approaching recession. While the consensus highlights turbulent waters ahead, different strategies and outlooks were offered. Maintain discipline in trading, watch key economic indicators closely, prepare for regional housing price drops, and anticipate more job market challenges. Thanks for watching Financial Analysis in Review for July 8th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.